Hey guys, Ken at Tortoise Capital Nightly Strategy Podcast, January 4th, 2021. So today I would classify as a reasonably strong day. We had a little bit of a gap up, sold off a little bit, but then finished at parity. What I like about today was that it pushed to a new 10-day high, new 30-day high, new all-time high, above 480. It cracked above 480. And then the give back later in the afternoon still kept it pretty much equal with yesterday's price. So we didn't lose any ground today, and there was still an indication of upward buying pressure. So I take that as a positive sign. Again, I'm going to be I have a long side bias right now. I will be adding swing trades if it gets above 480. You can see that we've got the beginnings of a little bit of resistance here at the peak of the RL90 or of the RL10, excuse me, at like 481. It has crossed the baby dragon, which is also rolled over. So there's just the first little piece of hinting of downward pressure by that, right? However, the RL 30 extension is still strongly up. The PSAR extension is strongly up. The volatility is beginning to diminish a little bit. You notice that the dragon got thinner and is still sloping upward. That's good. We're above the fair value. It held at the fair value and continued to gain today. We're within a short distance up to Z2. So the fact that we're still between Z1 and 2 is a sign this is not oversold. I mean, we've had 7 days now where it could have failed, but it didn't, and it's been holding the support level at the edge of the river. So I take that still as a positive thing. The Z3 upsides at 490. The Bollinger Band mean now is down here at 467, and the PSAR has crossed over that. So that's sort of an indication that this thing has some legs to the upside when the PSAR crosses over the Bollinger Band mean. That tells you that that your stop is above the halfway line in the river. So that's really a signal of an upside move. The RL90 is still strong and sloping upward. So everything looks cautiously optimistic here. I like what we got. Did I say 2021? Sorry, it's December or January 4th, 2022. All right. All right, so the S&P was down a fraction today, 0.03. The diamonds were the strongest at 0.6, and the diamonds are in a in a daily summer, as is the S&P daily summer, so that's all good. The Russell was off a fraction at minus 0.15, emerging markets minus 0.35, treasuries off a half at 0.42, and the Qs gave back the most today at minus 1.3. That's a little discouraging, but it still is in a daily summer as well. All right, let's take a look at the sectors that outperformed today. So we've got lumber and Mexico up 0.2 and 0.24, agriculture 0.66, S&P staples 0.67, Bitcoin, the other lumber at 1%, the Bitcoin trust at 1.14, blended commodities 1.2, Materials 1.23. We're going to see them strong in a number of cases today. Oil, commercial real estate up 1.67. Finance had a good day at 2.63 for sure. Blended large cap crypto 3%. Energy 3.5%. Ethereum, oil exploration up 4.2 and 4.29. And then individual stocks that crushed it today. John Deere making a strong move, 6%. Devon Energy 4.6. Cliff Natural Resources 4.1. U.S. Steel 3.13. So, and then Tex at the steel company at 2.56. When all of those are better than XLB, that tells you where the movers are, that it's the metals. And we're going to see that in a nice trade here in a little bit. Let's check the downside now. Underperformers, Wheaton Precious Metals and Blockchain, 0.26 and 0.34. Brazil, Lithium, Clean Energy, Discretionary, S&P Tech, minus 1.06. The FANGs off 1.7. Moonshots minus 3%. S&P Biotech 3.5. Marijuana 3.9. ARC Innovation 4.43. ARC Genomics 4.75. The underperforming targets. Let's see, Robinhood 5.5. Squarespace, Alcoa 4.5. So Alcoa is the only metal that we have that was the anomaly today. So that's company weakness because the sector and its peer group were all crushing it today. Tesla gave back 4%. Still is hovering right at 1150 with 1100 as a crucial round number support level, psychologically important. Virgin Galactic, PayPal, and Microsoft all off between 2.5 and 1.7. Apple down 1.27, along with that weakness in tech. So today it was not tech. It was energy, finance, and materials. And you've heard us talk about this before. So let me just say it again we got some new folks in here tonight. When it comes to the sectors, the long-term goodness of the market we're measuring by SPY. We're comparing that to the small caps and the diamonds so that you get the aggressive growth and the conservative mega caps. We're comparing those to EEM, which is the emerging markets for the global orientation. We're comparing those to QQQ to get the tech component of SPY. And so these two, the Qs and the Russell, become the ones that we are checking for aggressive exposure to the indexes by short-term traders. So we want to see if it's narrowly focused in the tech or broadly in the speculative small cap. So we're checking for depth versus breadth on that one. And then finally, we compare all of those against TLT to get the, the fixed income, the not equities portion of that. Well, when we're looking at SPY, then we also can take a look to see where is the strength in the index, in the market. And the ones we pay especially attention to are the ones that cycle a lot, and that's energy, materials, XLB, XLE is energy, and then XLF is finance. And usually one of those three is going to be very strong. One is decaying or flat, or one is losing. So these tend to cycle a lot in swing trade timeframes, like according to a short-term business cycle, if you can think of it that way. And then we normally think of XLK, which is the equivalent of the Qs, is we're thinking about the tech sector because traditionally that is the element that is providing the growth component to the big indexes in the broad economy. That's where you would expect to see innovation. So it's not unusual that when the S&P is up for a long time, that the Qs are the long-term engine that are pulling it up. But then by the same token, you get we draw that distinction with these cyclic ones. Now, these tend to go in and out of phase, like 1 to 2 weeks at a time, where you get some period of outperformance. And then when it peaks and you get a good stop in there, you end up missing the sell-off and you hope to catch it in the spring. So maybe it goes into winter and then spring, and we try to catch those pieces. So it's not unusual to see one or more of these that's in a strong uptrend, even if the tech is going through temporary sell-off. The strength in one or more of these can actually continue to pull the S&P north, even while tech is taking a break. So on the longer term time frame, we really think that in an upward moving market, you're going to get most of that from the tech sector. We wouldn't be surprised if that was the case. But we watch that compared to these cyclic sector rotating elements. And then inside each of those, so inside XLB, we can look at cut and wood as the two lumber ETFs. And then we can look over at the steels or the metals, where we're looking at US Steel, Cliff Natural Resources, Nucor Steel, TX, the steel company, and then we give kind of an honorable mention to Alcoa. Not a steel company, but it's kind of metally, and So when you see XLB moving up, it's not unusual to see either the woods or the metals leading the way. And so on a day like today, where the S&P was basically flat, but XLB was better, and then most of the metals, US Steel, Cliff, Nucor, TX, these were all better than XLB, and only Alcoa was the anomaly. What that says is that there is juice in XLB that's causing it to outperform the market, and the whole metal complex is better than XLB. So all other things being equal, I'll be looking for a continuation pattern out of those tomorrow. My two favorites are US Steel and Cliff. US Steel because it's a big name, and then Cliff because it's such a focused mid-cap steel producer that it gets a lot of good volatility. So those are my two go-tos for the metals as part of XLB. And so like today, when XLB is better, I look for a continuation of that relationship until it doesn't happen any further. So you can actually now start drawing a distinction between the components of your sector. Like sometimes you can prefer cut, sometimes you can prefer wood, depending on which one of those has some relative strength. And then we can do the same thing for energy and the same thing for XLF. Now, in the case of XLF, what I like to do is I like to look at the big banks like JP Morgan and Goldman, but we can also play that with FAZ for the short side and FAS on the long side, because those are triple leveraged ETFs that are correlated to XLF. So if XLF turns out to be the thing that's really working, and today it was up 2.5% when the market was flat, so that says somebody was buying the financials. So that could last for a couple of weeks. So XLF will be on our radar, as will FAZ on the short side in case it starts to collapse, but FAS if we think that thing's going to start working. And then inside, as a comparison to XLF, we like to look at the financial disruptors like PayPal, Squarespace, Coinbase, and Block, the ETF that benefits from crypto. So if the big banks and centralized finance are going to suffer at the hands of crypto and the innovators, then we would expect to see PayPal, Square, Coin, and Robinhood. I should add that in there too. We should see those financial disruptors continue to do well. And then inside energy, we're looking at XOP, oil and gas exploration, PBW, the ETF for clean energy. We're looking at USO, which is oil itself. And then we can look at things like Chevron for individual companies. All right. So that's how we try to get in tune with the movement of sectors by looking at the ones that are cycling and which ones are in season and which ones are out of season. Then by looking at the relative health of technology, XLK and QQQ versus the health of the S&P, and then comparing the S&P to these other broad indexes to see, is it the broad index? Is it tech? Is it small cap? Is it conservative large caps? Is it the globals? Or is it the equity market altogether? So that's the basis for thinking our way through this daily sector report. And then by using the elements of the 4 seasons in different time frames, let me show that next. So now, as we're looking at these sectors above us here at the top of the screen, we're looking at, first of all, there's 2 monthly components I like. I like monthly spring and monthly summer. So in terms of, if that's our 0 line and we see the MACD histogram doing that, what I really like is the spring. So here's winter and there's fall and here's summer. So that makes this the spring. And then when it crosses the 0 line and is continuing, the 2 areas that I want to see on the monthly are the spring and the summer, because when the whole market makes that kind of a turn, that monthly endurance, again, can last for multiple months or half a year. And if we can catch the turn on that after a period of depression, then that really sets us up for a nice long-term fractal type of move. And then by the same token, I like 2 elements in the weekly. I like looking again at weekly spring and weekly summer for the same reason. I like spring and summer so that I can get those long pulls on those 2 higher time frames, and we get some like fractal contributions to our swing trades. And then because I'm also a tactical trader, not just a swing trader, I look at all 4 elements of the daily. We look at the winter, the spring, the summer, and the fall, and then I can favor different kinds of trades on the basis of where we are in the daily. And so the color codes just help me figure out which ones are which. So I like Devon Energy right now because it's in monthly summer and daily summer. And that corresponds nicely with strength in XLE. And when XLE is doing good, and there's XLE today, it was up 3.5%, and it is also in monthly spring, monthly summer and daily summer. Then it's never a surprise when I see Devon Energy, a nice mid-cap energy company, also doing well. So all other things being equal, tomorrow, Devon Energy is on my short list. And so that's why when I see things like XLB is up 1.23 and is in a daily summer, and then I see TX, the steel company, US Steel, Cliff Natural Resources, those are all the steel companies. And my 2 favorite ones, Cliff and Tex, were up 4% and 3% today. My expectation is that those will continue to do well. What I like about Cliff, it's also on a daily summer. US Steel is also on a daily summer. So now I'm liking the whole energy sector, summer and summer. And now XLF also summer and summer on the daily and the monthly. So those are all very good signs. And even oil is helping push the whole energy sector up as well. So what we have is the S&P was flat today, but XLE and B and F, all three of those were up strong, whereas tech was the big loser today. So XLK and the Qs are heading down, but the alternates were all strong enough to offset the sell-off in XLK, which makes the S&P flat today. So all other things being equal, I will reward any upward price movement in those sectors and in those targeted companies tomorrow. And I will watch to see if tomorrow is the day when tech makes the turn, so that we can catch that in the spring, so to speak, and get like SSCs. So I'm not in a hurry. I'll just wait and see. And now if we see tech make the turn tomorrow, it wouldn't surprise me to start seeing these things begin to diminish as money rotates out of those and into the favorable buying tech on sale. So that'll be the sort of the macro approach to target selection tomorrow. So let me know in the chat box if you found that helpful. All right, so here's one I want to highlight today. So this morning, before the market opened, Danny and Bob and I often share notes, and so we've been watching the the materials sector, and so this is an alert from Danny in CCJ. Whoops, in CCJ. And so this was the alert, from earlier. We had seen a pullback to the, this is like the 200 moving average. You can see the 270 is here. And so this was a daily chart. You could see it cranking its way higher, higher lows, higher highs, until it broke the PSAR and then sold off, created some short-term support, and then like an SSC beginning to make the curl. And so we'd be looking at it to get back up into here. Well, if this is the daily chart here, and then the chart behind it is the minute chart. And so what we're looking at here was the day before, and we're using the technique of visual box trading. So what I like to do is, when I see something that is poised to make a strong move, I like to go back and look at the 1 minute charts on the day before, find some place where it is basically sideways quiet channel, and we're getting this kind of range compression, very little volume. This is just kind of the noise, background radiation, that there's no buying or selling pressure. So I can take the size of this box to be a noise box. That's how much it varies when there's no buying or selling pressure. It's just marking time. And so now I can use that as my standard risk box for the next day when we cross over at the open. And then the next day it has a bit of a gap up. It moves one noise box off the bottom, so I buy it, and I just keep my stop in place. It has a couple of head fakes, rolls up, and then starts rolling down. And I say, you know what? Let me just go ahead and lock in no lose plus dinner for two. I just want to get paid a little bit. It sells off back to my opening price, and then gives me a COTA 2 up, pull back, and takes off again. So I just buy it as it looks like it failed to fail further. I take my standard risk box, which comes from here. I just put that on there and make my little risk box. It moves up and then starts pulling back. So I take my little fractional. Don't like losing money. It bottoms out, then makes like another Kata 2 entry. So I go ahead and buy it, use that same risk box. This time it works. I thought about a second position here, but I was working another trade. And so I just monitored this thing moves up. And then when it breaks through this support level, I just go ahead and take that trade and exit right there. So my entry was here. My risk box was here. So that gives me about, 1, 2, plus a couple fractionals. And then later, it gives me a low, a higher low, and that feels like a Kata 2. So I enter again with the standard risk. It moves up in my favor. By this time, I go ahead and move my stop to here. So I've locked in that gain no matter what. It monkeys around and then comes back and hits that stop about 10 or 15 minutes later. So this is a way to do what we call hybrid trading. All right. We take a daily chart that is favorable, that gives us reasons to believe this thing could take off. So, we have this low, and this low comes back, holds support, and then starts to make the hook. And so we're betting on some kind of move like this. And then that manifests into some generally upward buying pressure tomorrow. And now CCJ is strongly connected to materials, and materials were strong today. So that was part of the narrative of materials outperforming today. So that makes this a low risk trade. You have a critical state on a daily that wants to go higher. You see actual evidence right from the opening that it wants to go higher. And then you just manage your risk. And then one of them works. And this one ends up paying about probably 2.7 to 3R, depending on, what that final score was on that one. So that's a way to think about hybrid trading. And after a while, when you've looked at tens of thousands of charts through the RLCO lens, then the visual box trading, you can actually see those patterns as they're occurring with price levels. And I like to change it up every so often just to get a fresh look directly at price. So that's a quick lesson today on the hybrid box trading. The other one I just want to highlight from today, this one was in US Steel. And so it had a little bit of a gap up. It gives us a pullback to the RL270, makes a low. We buy the supported spring crossing. I just, as it comes back, I don't want to let it cross the VWAP, so I take a little fractional win. It quickly finds support at the 270 and reverses again, crosses the dragon. So I just buy it with the standard risk box, and I'm using the PSAR flip in every case. This thing starts moving up, and I just take the managerial exit. So if there's my risk, that's about 1, 2, 3R. And now it gives us a very clear Kata 2, because you have a low, a higher low. That's what makes this one a Kata 2. A third, or second, I should say, higher low with the RL10, and it finds support at the Z-2. So we get the RLXD, so we buy it and scratch. It doesn't fail. This is where you would expect it to fail back to the VWAP, but it doesn't. It holds support and takes off. So again, we use the standard risk box here of the PSAR, and then this gives us 1, maybe 1.5, taking the managerial exit. So that's probably for our trading single position US Steel, 1 minute, no overnight risk. And that's all part of the S&P was flat, XLB was better, and then US Steel and Cliff were both better, and it just X was the first one that I noticed that was moving. And so that was my choice to play the upside. Okay. My brother asked, standard risk at the PSAR. Yeah. Yeah. So when we're looking in this standard pattern, there have been times when we have used the bottom of the dragon, but anymore, I just take a look at where the RL10, which is the price, bottoms out. That's where the PSAR flips when it flips. So when price crosses the dragon, if the PSAR hasn't flipped yet, you're going to use the bottom of the RL10 as the standard risk box, because that's where the print is going to go to. So in the same case here, you see the bottom of the RL10, and when the PSAR flips, there it is. Here's the bottom of the RL10. Here's the PSAR when it flips. That's just math. It's because both of these, the RL10 and the PSAR, are derived from the RL10 value, which for us is smoothed price. So this gives us an advantage. We get a statistically significant indicator that is very smooth. And so you end up getting these long, orderly moves because the PSAR is not reacting to the noisiness of the price, but to the smooth, orderly flow of the RL10, which is price. Okay. Yeah. What you'll find is that for intraday on the 1 minutes, you can actually engineer a tighter stop with this statistical frame than a frog box. A frog box might get you down here, depending on what the frog box is for US Steel. And so I just like using the visual display, because the way we've got this PSAR tuned is that when those trends work, those keep you in the trade for a long time. And so then we use in our exit strategy, the standard one, we like using let me make that a little bigger so you can see. We like using the Bollinger Band mean as the managerial exit, like I just did here. So when you have an upward moving trend, then that price action should stay north of the middle of the river, because you're getting that upward buying pressure that keeps pushing it up. So it's staying above the midpoint of the river. And then when it crosses, we can say, oh, that run is done. And by the same token in here, during that upward trend, it's all staying north of the Bollinger Band mean, and that run is done. So the managerial exit for us is when it crosses the Bollinger Band mean, because I don't want to own it if it's down below, because that's where it could be one of those kinds of moves. So that's our conservative exit. The more aggressive exit, the sniper exit, is we use the PSAR. And now you can see, so the PSAR will keep you closer, but there are sometimes, like, it might get you out a little bit earlier than waiting for the Bollinger Band mean. Like this one would have gotten you out here, and then you might have wanted to re-enter here when it crosses back above, but then you end up losing a little bit on that one. So we think of the PSAR dot as the aggressive or the sniper. And we think of the Bollinger Band mean as the conservative or the manager. And so which one do we use? Oh, which one should I use? Well, I just put half on each one. Once I've gotten to no lose plus dinner for two, just put half the position on each one. And that way you get something like a blended. Sometimes the sniper will get you out, but then it'll re-enter, so you have to re-enter. And meanwhile, the manager says, see how if you just chill out, just give it room to run. But there are other times when the sniper will get you out, and then it goes down and the manager gets kicked out on the way downward. So then you're glad that you got half the position at the better exit, right? So rather than spending a lot of time worrying about things that you cannot know ahead of time. Like for this trade, which is the right one to use, you can never know that because you're living your life going forward. So in order to eliminate all of that anxiety and cognitive effort, I just say, look, I'm willing to take half and half with the sniper and the manager. And on average, I'm going to get the midpoint. So what's the difference? I'll just split the difference. Now, the extra one on that is when I'm using the PSAR dot as the sniper, there are times when we might get an exaggerated parabolic move and it starts rolling over. And that's where I might use a 1, 2, 3 sniper and manually override the PSAR dot. So instead of just tracking the PSAR dots and waiting for that to get hit, if I had a really nice move up and it starts to drain, I will accelerate the sniper and just say, I'm going to cash the gift, which is this extra piece here, instead of waiting for it to come all the way back to the sniper. And when I do that, I usually just take all out and get the whole position and just be done with it, and then get into the zero state and then get ready to re-enter. So we talk about that in the foundations course and in the 2-hour battle drill. And I wanted to get that on tape there for the people. Okay. All right, let's take a quick look at the, plus we're starting a new session here this week and get some new folks on board. All right, let's take a look at some of the trades from the boys. So here was Alcoa. So we remember from the daily report that Alcoa was underperforming. And so here's one that rolls over. You get short, 1, 2, 3 exit, reasonable reentry, 1, 2, 3 exit cashes. This is a reasonable effort to aim for the Bollinger Band mean, the RL270 and the VWAP. And then if it holds there, you would expect it to come back to test here. So this entry with this measured risk to the PSAR is a reasonable way to shoot for 3 units of reward to the top for 1 unit of risk to the bottom. It doesn't follow through. I might take the PSAR exit here. I may advise you to do that. So when it's been in the money this much and gets to the Bollinger Band mean and then starts to reject, and I might just say, take that here and be done with it sooner. And then you could actually look at that as a short position, because you want to get short if it breaks below the RL10. So this is a chance to get short. So here was the long, a good exit, another good shot. You're looking to get to here. It doesn't follow through. So this time, instead of getting trapped the third time, when we got a Z3 pinch happening, now when it breaks down, what he's got is this set of lower highs. And now this is a kata 2 to the downside, and he gets paid. Now, what I want to say is, because this one got paid and you're in the alignment with the downward pressure, now when this rolls over and makes another lower high, you want to be short right here at the PSAR flip instead of being short here, which is a collapsing dragon. So you're short at the collapsing dragon from here, but this is one where you can get like a kata 2 to the downside, and you'll get paid even more. Okay. That's a reasonable capture. This was a good effort. No reason to be at your desk during that lunchtime anyway. This is a reasonable effort on the long side. You're still looking to get back to the VWAP, but when that fails, this is all part of that larger downward trend. That's where your short should be. And then you crush this. And then that becomes your second position and third position. I'd almost advise you this third position. I'd like to see you get that up in here before it crosses the RL 270. Then this one would scratch. So altogether, lots of good work in there. 1.8 for the day. And there was a few improvements that could be made. And I think you got most of what was going to be available from that trade. Nice work. This is the S&P. So this is all about emotional bank account and the decision not to trade because of not being in the zero state cost 7R on a day that was minus 2.8. So after 1, 2, 3, too tired to trade, and that's the 4R move. And then fractional gain, quick loss, now mentally tired, and let this one, which was you'd had one leg down, 2 legs down, we got to take that one at the PSAR and get paid. Then you would have the emotional energy to get long here for either 3 or 4 more R. So we've got to remember that each trade is one of the next 1,000 trades. So you've got to have enough emotional resiliency in your bank account to keep taking the shots. And remember, it's the score is for the rule set you're following, not for you as a human being and your ability to predict the future. No, it's based on your ability to set rules and follow them with precision. Okay. So we got some work to do on emotional resilience there. Keep shooting. All right, here's the triple Qs. So the Qs, the triple Qs are that's a 3 times NASDAQ 100. And so here we have a Z3 pinch, and it's as you can see it because he's using the trading views version of our charts. And when there's an abnormally tight pinch, then the Bollinger Band lines go to yellow instead of red. All right. So he's got a really nice tight pinch in here. It breaks down clearly. He's using a pretty tight stop. Gets a second position, a third position, a fourth position. Here is the very definition of failure to fail further. Great exit. I'd like to see you get long in here. Still, that's pretty good. That's a great stop. This is another reasonable shot. Reasonable shot. Now we're noticing the Z3 pinch again. Now, what I want you to notice is that what I want you to develop, especially on the indexes, I want you to develop a standard risk box. Okay. So this is a reasonable box. You could have even used this C3 pinch box. Then when you have a very, very narrow element and you take that little loss, instead of being a 1R, that would only be this much out of a standard risk box like that. So that will keep you from getting too large on your positions. That way you're getting a standard position size, and it's based off the size of the noise box or that initial breakout box. And that way you don't have to compute position sizing risk each and every trade. But on the other hand, that gives you a really nice trade there. So don't think that you can say, oh, this is going to be the one that, or this is going to be the one that fails. So I'm going to use a big box, and this is the one that works. So I'm going to use a small box. You brought home 13.5 R today. So I'm not sure there's anything broken on there. This is a really good second entry off this first entry, because here's the pinch, and now you have a Z3 pinch breakout, great exit. So that's 13.5 R. And remember, this is on a day when the Qs were negative. So you made 13.5 R on the long side on a day when the index was down. So that's not too bad. Here's the cues in the afternoon. And so the question was being worried about sideways quiet channels. I do not use Williams percent R. This blue squiggly lines is Williams percent R. I do not use that. You have everything on this chart already that you need for making the decision. When you are in abnormally compressed ranges, that is the Z3 pinch. You do not want to be trading in here where it is sideways but not abnormally quiet. So you don't trade inside this. You trade here on the breakouts. Look how exaggerated those RL10s. That's not telling you anything that you can't already see from the vision that you have on your chart. And here's your Z3 pinch box. That's the one you crushed. You don't need this extra crap. You already can see that it's failing. So take that off. Use the color indicators to find those moments of abnormal pinch. Here's a good one. And then this is fake one, go two. When winter turns to spring, that's your entry. With your tight wrist box at the PSAR flip, bang. Here's the S&P on a 5-minute. Reasonable upside. Here's where you got to take that exit. Not here. This is where you get short and then you get paid. You got paid, but that would have been 3 instead of 1.5. And then this would have been a little, not quite 1. This is the Z3 pinch. Yeah, obviously you can't take it if you're not at the, so a couple false starts. This one, you should be taking the exit here, not here. This is your entry, not here. You're waiting for it to break out of the river. You waited half of the move, even though it pays off. So this would be a half an R loss instead of 1 R. And then you would have gotten an extra R. So that's like, that would have changed the negative day to positive. This one here, I also want you to take this trade because it's holding steady at the VWAP. It had one move up, one move back, held steady. You get the RLCO, supported spring crossing, and you'll get paid inside there. All right, this one is in, this is a great capture on 1.1. He sees the PSAR flip and it rolls down. RL10 bottoms out, crosses, there's the RLCO, that's the P1, right? Gets the entry, standard risk box, good fractional. That's what you're supposed to do. You can actually get short there. He waits for this one to break down again, gets short, gets paid a little bit, and then the PSAR flip, supported spring cross. You're in the elbow of the dragon. Very good risk management all the way up for 2.2 to finish up over 1 for the day. For your first chart, well done. That's the hardest one to do. Very nice work, Ben. There's a lot more to it when you know that you're going to mark it up and put it in the room, isn't there? That's how you start developing the emotional resilience and managing the emotions and the courage. After a while, it just becomes routine. You win some, you lose some, but you want to trade well. Now, something that Luke does is he records that portion of the video that is coaching his charts, and he uses that as part of his to build his own trade log. So you might consider doing that. The best software that I know of for doing that kind of editing is Camtasia or Movavi. Camtasia runs about $250 and has a lot of power and easy to use. Movavi, Movavi, is about, if I recall, is about $79, and it gives you the same kind of editing and movie creation. So you can take a long movie and take snippets out, and both of those are pretty intuitive, if that kind of stuff appeals to you. Yeah. Look, does Real Player give you editing capabilities? Do you know what that costs offhand? Trimming. Yeah. All right, let's find the daily reports. That's the Master Confucius. All right, so dashboard number one, bullish normal. We are overbought across the board with the exception of just above average there on the 2-day. ADX is slowly getting stronger for the long side. Not a strong trend up yet, but signs are pointing towards that. Risk Z is still favoring the opportunity for swings. You can see the swings of the last couple of weeks as it went from spring into summer. Max Min Pains, AXP, Diamonds, ExxonMobil, and Coke. We still have a few tech companies in there, Cisco and Microsoft on the 10-day max pains. The biotechs are getting smashed, and treasuries have given back some gains now that the equities are starting to resume. I would be watching NVIDIA as an opportunity to buy quality on sale. You know, if there's hostilities around Taiwan and Taiwan Semiconductor, which is about a $800 billion semi company, that's going to make NVIDIA even more precious. So I would keep my eye on NVIDIA as an opportunity trade. Just one doji in the Dow in Nike. Pfizer is a channeling and an overreaction, and 2.3 to 1 on the auto framer. These that are in the overreaction short, these are ones that have been the weaker elements, have had a nice rebound. And so if the market got weak and they are suffering, that would be the first places that you would go to look to be short if you wanted to do that for short targets. Intel, Dow, Boeing, and 3M. In the ETFs, there's four dojis today in the Euro Asia blend and Asia less Japan, the European 350, and in the Russell mid caps. Treasuries are 4.6 to 1 on the auto framer. And again, you can see the strength in energy and finance was really exceptional today. And oil exploration was very good. XOP, one of our favorite trading targets. You can see how bad Brazil has been. It's been a exceptional loser on every dimension, every time frame except for the 1 day, but it's been really leading the way downward, if you will. The auto framer, only treasuries and Pfizer better than 2 to 1. You get diamonds, the mid caps, and oil on the daily squeeze, and that acts like a coiled spring. And then I also like that the S&P and Euro Asia are also right at 2-1, and we're 1.9-1. That says the entire market is compressed and ready for a surprise breakout in either direction. So we're going to be ready for that. That makes it an ideal trading environment for tomorrow intraday. The summer is really dominating in MACD in the Four Seasons there. So it's everything's enjoying this. Lots of standard big winners, all greens across the board there. I like Cliff. Again, finance and energy look like they've got the juice. And whenever energy is working, I also add XOP, the oil exploration, because that's like a leveraged energy element right there. Meanwhile, Brazil and treasuries just can't get any love, or Latin America. All right, that's everything we got for today. As this market is managing to hold its head above the river, and the expansion of the Bollinger Band means the river, that's hinting at the possibility of an upside move still. But again, it's also hinting at the possibility of a collapse back to the bottom of the river. That would be also least surprised. It's a coin flip for either one of those, which is why I want to be ready for a breakout move tomorrow on this kind of daily squeeze market that we have. It almost feels like this moment here, where failure to follow through to the upside was followed by this kind of downward move. So we'll be ready for a move in either direction. Okay. Yeah. Luke makes the point, keep shooting and then assess at the end of the day. And that will build up your resilience. All right, that's everything we got for today. Let's get this published and posted, and we will see you tomorrow.